Now let's do an application on return earnings. Let's go back on the theory. This is the theory related to the return earnings. So the statement of return earnings is this little statement attached to the income statement. And the characteristic of this statement is that it's a cumulative type of statement. Why? Because it shows how much money the common stockholders put back into the company since the beginning of the company. So for example, here for this particular business, common stockholders at the beginning of 2015 had accumulated as return earnings 250,000. Now this current year, 2015, they made 100,000 as profits for common stockholders, and they choose to take back as dividends 50,000. This number shows an income statement for the current year. And the rest of 50,000, they want to put it back as return earnings for the year. So 50,000, the rest of it added to the original sum is going to have end of the year 300,000 return earnings. And that's the concept we are going to apply in the next application. Let's work on number 16. So here we have operating profit 200,000. Then we have interest expense 10,000. That's given. You don't have to calculate it like we did in the previous problem in income statement. Then what's left over is earnings before taxes, subtract interest from operating profit. Then we pay taxes. Again, it's given, we don't have to calculate it. Subtract it from earnings before taxes. What's left over is called earnings after taxes or net income. From the net income, we subtract preferred dividends. Those are the dividends that preferred stockholders take home. They are paid first, 18,750. And then we subtract that from earnings after taxes, and we have earnings available to common stockholder 110,000 for this year. Now, common stockholders wants to take home as dividends 30,000. So that means that the difference between 30,000 and 110, how much they made this year, is going to go into return earnings for the year. So also the application asks us to calculate the earnings per share and the common dividends per share. Earnings per share is 1. We are going to do that first, and then common dividends per share 2. Okay, earnings per share. We are going to have how much earnings are available to common stockholders, which is 110,000, divided by number of shares, given in the problem as 20,000 shares. So we divide by number of shares, and we have $5.50 per share. And the dividends per share, we take dividends amount 30,000 divided by the same number of shares. So this is 150 per share. And for B, how much was increase in return earnings? Well, we just discussed earlier that this is the amount, the difference between common stockholders' money for the period minus the dividends.